It's Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from the main stage at Consensus 2025 in Toronto. And joining me to kick off our coverage, we have Paul Brody. He's global blockchain leader at EY. We're here to discuss long-term adoption and implementation of stablecoins, surely to be a hot topic here at Consensus this year, and how blockchain can help companies with cross-border compliance. Paul, it is great to have you as always.
Thanks for having
Welcome back
me.
to Trade Talks. Why does EY believe that stablecoins have won or is winning, and what does this mean for enterprise customers?
So stablecoins are really, I would say, the second killer application of the blockchain ecosystem. The first was just the original cryptocurrency use case, but stablecoins, particularly for enterprise users, is really the first true killer application. Basically, if you think about any business use case, investing, procurement, enterprise purchasing, and most enterprises, they do business in the real world. Their business revenue is in dollars or it's in yen or euros, right? You don't want to change out of that core currency and move into a different one in order to do transactions. So to do business on chain with minimal risk, you really have to be doing it in stablecoins.
So the natural question is, what will stablecoins enable for financial institutions, and how do you anticipate their adoption, their implementation, and how do you see it evolving in the next 5 years?
So the first thing that people have really been adopting around stablecoins are kind of individual global remittances. That's been a huge use case, and it's one that's moved way faster than the regulatory environment because governments don't really have the wherewithal or the capacity to pursue one individual who's sending their grandma in another country some stable coins, even if technically those stable coins are not legal in that country. Business use lags behind because you've got to be squeaky clean in terms of your regulatory compliance. But we are now seeing the boom in business, enterprise and business and institutional investor use cases. And they're really driven by kind of two things. Number one, you need stable coins to buy most assets, right? Most investment assets are denominated in dollars or euros or whatever. You're going to need stable coins for that. Number two, again, as I mentioned at the beginning, business use case, procurement, payments, everything like that. Just to give you a sense, we're in the process at EY of fully automating our ability to receive and send stablecoin payments so that wherever you can do so as an alternative to traditional banking rails, we can implement that and save ourselves some money.
Well, the calculus has shifted a bit due to geopolitical tensions. You also have shifting tariff policies as well. How can blockchain technology help companies manage cross-border compliance and navigate the shift in supply chains, because you're working with multiple jurisdictions and shifting policy here?
So to start with, I mean, the dollar dominance is very strong. Some dollars are about 60 to 70% of global trade settlement. They're very dominant in that space. Interestingly, dollars are 99% of all stable coins. So international trade needs US dollars for settlement. We can't really do cross-border trade without US dollars. So that's one really starting point. The other thing is there's this whole, if you think about a business agreement, it's money for stuff, right? So the money now we have tokenized as dollars, but we also are going to tokenize the stuff. And as we get into this world of new trade restrictions, understanding where your product came from has suddenly become much more important. If there are huge differences between, say, a component sourced in Mexico under NAFTA versus one sourced in, say, Brazil, knowing the origin and being able to prove the origin is a really big deal. Blockchain is excellent for that, and you can save even more money and time by making sure that the raw data, the tokenized asset, and the money are all inside the same transaction processing system.
So as assets continue to be tokenized, you almost need to adopt stablecoins in order to complete these transactions. I mean, that's where the liquidity and the sourcing is coming from, is what it sounds like.
Yes, we're going to see there's a liquidity value, there's an operational speed value. We learned from doing like smart contract procurement that we can cut cycle time by like literally 99% and administrative cost by 50%. Given that both of those things are going to get more complex with more complex trade and capital flow rules, it's going to be more valuable to use tokenization rather than traditional infrastructure.
So tell us more about recent upgrades that you have at EY. You have Nightfall, EY Blockchain Analyzer. Tell us about those tools.
So the big incremental upgrades that we're making right now are around supporting on-chain privacy, because enterprises are not going to do transaction processing on-chain without privacy. The big step we made forward is we completed Nightfall 4, which we announced last year. We completed all the development and engineering and all the testing. It's now going into we're using it as a beta internally, and we just are contracting now for an external security audit before we do a public deployment. So that's a big milestone. Private transactions at scale are a big deal and low cost. And then secondly, we've made a big investment in our blockchain smart contract security. So we've got an AI-enabled tool that allows businesses to basically understand this digital smart contract that I'm about to sign or this token I'm about to deploy. Does it have meaningful security risks, right? Does it? How can I test all the use cases? What are the use cases? We have been able to basically shrink the cycle time to do a full assessment from something like 6 weeks to around a week.
All right. Appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.